And good morning and welcome to a VSA Capital special 5-minute morning miner because it's the start of the year. It's Monday the 5th of January and we're going to give our tips for the year. That's myself, Ollie O'Donnell and Paul Rankin. I know everybody's been waiting for this for ages. The excitement is intense. But Ollie, first of all, actually, Happy New Year to all of our listeners. Let's hope that in 2026 we're as accurate as we were in 2025, because Ollie is going to quickly just run through the results of 2025, and we were spectacular.
Yep, Happy New Year. Well, on the commodities side, silver was the runaway winner, especially with what's happened over the last couple of weeks while we've been off over Christmas. That was up 143% through the year, now at around $75 an ounce. Again, another commodity that's had a bit of a turbocharge in the last couple of weeks was platinum, up 125%, and then cobalt up 120%. The bottom three were coal, oil, and vanadium pentoxide, down 14%, 20%, and 28%. respectively, but almost everything else across the commodities spectrum did increase to some extent. So then it's all about which stocks you pick to capitalize on that. And I think Andrew talked about the winners for the end of the year. So his pick of Strategic Minerals was not only actually the winner of the three of us, up 550%, but I think the top performing mining stock in London, obviously with its drilling results and exposure to tungsten. The next couple in London were Makanga up 444%, Empire Metals 449%, and Guardian Metal Resources 388. Paul's pick was ahead of those as well. Oh My Gold Mines in Guyana up 464%. And my pick, Sierra Madre, was sadly lagging, although it was up 256% through the year. So still not a bad result.
I think we've all done remarkably well. It's pretty sad, isn't it, when you lose with a return of 256%. But I think also, I mean, obviously silver was your pick and has been amazing, but we're hugely bullish of, tin and tungsten, which have also been amazing commodities all year. So we've done well. So let's look forward, 2026. Can we repeat it? It's a bit tough call. But let's start off with just with the commodities, just to sort of set the scene, and then we'll go on to the stocks. And I'm happy to go first. My commodity pick this year may surprise a few people. It's a commodity that I haven't actually been that bullish on, and it hasn't really, I would say, performed particularly compared with all the rest. But I think that this year we could see quite a dramatic change. And so I'm going to go for uranium. It's currently trading around about $80. I think that America could decide to stockpile it actually and put it on the critical metals sort of list. And I think that people are becoming more and more aware that we need an awful lot of energy for these data centers and things like that. And so the SMRs are suddenly going to become much more popular. And I think we could see a spike up in it. So I'm quite happy to say we could quite easily, during 2026, see it double to sort of 160. It's been there before. It's not within the realms of imagination. So uranium is my commodity pick. Ollie?
Well, it's a tough choice between sort of momentum in commodities and or something new. But I think with the extra performance we've seen in the last couple of weeks in silver, it makes it a little bit tricky to give that as top pick again, even though at $60, as it was when we were starting to look at this in mid-December, that looked like it could still go another 50% higher. But I think it's 75. Going another 50% is a bold call. I think 90 is very achievable. But so I'm going for something different. Lithium, I think, has had an interesting second half of 2025. There was a major mine shut down in China, and that has helped to reduce global inventories. And although it may restart around Chinese New Year, I think it's really tightened up the market. Ganfeng are guiding to a 30 to 40% increase in lithium demand globally year on year this year. And although they're talking their own book, they do tend to know what they're talking about. And that is a seriously big increase in commodity demand, which combined with that tighter market, I think lays the ground for an increase in price, which can still happen in a volatile fashion like a couple of years ago, because the cost curve is still such a strange shape with a large amount of high cost Chinese capacity that needs to come on to fill that gap and needs higher prices. Maybe it's this cycle that brings in some of the bigger projects like Lithium Americas that will smooth the cost curve and stop it going back to $90,000 a ton in the cycle after that. But for this time round, I think we're in for some more volatility.
Yeah, interesting call. I like that one. Paul, come on, what are you going to go for?
Oh, I'm going to be rather boring in the metal space here. One of the large metal commodities that essentially has been lagging somewhat as far as price performance among the metals this year, I think will improve next year simply because it has a lot of the same fundamental drivers behind it that the copper market space does as far as its availability and its costs and that sort of thing. My metal for this year, 2026, is aluminium. And the reason being, we're looking at further curbs on exports from China, and China, just like in copper, also dominates the world market in smelting capacity. One of the big stories of this year that we had seen here in the latter half of this year too was the volatility we're seeing in energy costs overall, and aluminium smelting in particular is a very energy intensive activity, such that the costs associated with the energy component have forced a lot of Western companies into negative production models or pricing models in order to stay in business, such that I think the market's going to tighten up quite considerably in aluminium in 2026 myself. So my pick would be in that space for this year. Probably, and I'm thinking maybe in the range of 20 to 30% price move or so.
Interesting, always interesting. One final little, I haven't gone for this one, but I was looking at it, but found it so difficult to find that it's an accurate price. I think phosphate could be really interesting this year. Obviously, people think of it as a fertilizer, and there are different types of phosphate. But with the massive growth of lithium iron phosphate batteries, you could see some interesting spikes up in phosphate metal, if that's the correct terminology. So I'll just give that one a mention too. But anyway, there we go. Right, let's go to stocks. We'll do a slightly different order this time. Ollie, why don't you start? Paul, you can go second and I'll go last.
My top stock is going to be Midnight Sun. We've talked about them quite a lot over the last year on the podcast, and they are in the midst of their drilling at the moment. So far, well, they held a technical webinar just before the end of the year, which told us they've drilled now about 2.5 kilometers of the Dumbwa soil anomaly. They've only got a small proportion of the assays back so far, so lots of results to come in the early part of this year. The key thing is this is an analog for the massive Lumwana copper project around the corner in Zambia, which is a multi-billion ton project with grades at around 0.5% copper. And Midnight Sun are looking to find something in terms of similar scale. The soil anomaly that they're drilling is 12 kilometers long, and they've drilled about 2.5 kilometers of that so far. They're drilling systematically up from south to north. So this could be huge. The highlights so far have been 22 meters at 1%, 15 meters at 0.98%. And one of the interesting points that came out of the technical webinar is if you stack these intercepts on top of each other and look at them in a fully diluted manner, you're looking at 136 meters at 0.2% copper, 160 meters at 0.4% copper. So very large intercepts. This is right at surface, so there's no strip. And if you do this over a length of 12 kilometers, then it's a huge resource. You've got two comparable transactions really in the last sort of 20 years. Tenke Fungurume, 50% of that was sold for $2.65 billion to the Chinese, and Lemoine itself was sold for around $7 billion to Barrick. Currently, Midnight Sun has a market cap of about 300 million Canadian, so 150 million sterling. They're well funded after a bought deal in Q4 this year, and the drilling's pretty cheap, although there is a lot of it to do. There is also a second strategy, very high grade, shallow oxide copper, where there should be a resource coming out imminently, sort of 22 meters at 15% copper, those sorts of grades. And there is a near-term cash flow strategy to help First Quantum fill their mill. They need oxide to use up the excess acid from their sulfide circuit, which they have plenty of, but are lacking in oxide mineralization now. So that could further support cash flow and minimize dilution. So a lot to look forward to in 2026 for Midnight Sun.
Yeah, it's a good call, actually, Ollie. I mean, as you say, it's one we've talked about a lot. It is a great company. So we'll watch that with interest. Right, Paul.
Yeah, I'm definitely going to play a contrarian here in this point, not in the commodity that this company produces, but in the price action that the company has shown not only for this year, but the past couple of years. It's a gold producer in Africa. It has had its issues here for the past several years, such that the share price as a gold producer is definitely bucking the trend, and it's been down by quite a lot. Although in this most recent period, its gold production is on the ascendancy at this point. That company is London quoted Ariana Resources. It's a 34.9 million market cap company, and yet its production is above 20,000 ounces a year. And during 2026, with the two operating mines that it has, it should more than double that production. It also has the Dokwe gold deposit down in Zimbabwe that it is in active exploration on towards working up the feasibility studies in order to put that one into production. My investment story on this case for Ariana is that its Kızıltepe mine has proved in Turkey has proved to be better than hoped for over the years as far as its production is concerned. The company has a 23% interest in that particular operating gold-silver mine, and it continues to operate at this point. They have just in recent weeks put a second mine about 30 kilometers away called Tavshan into production, where the Kızıltepe mine was a milling operation, or is a milling operation for vein-hosted gold. The Tavshan deposit is a heap leach deposit that is essentially treating silicious volcanic ores. that heap leach, they are loading the heaps now at this point, and the leaching is now underway, such that the production profile for Ariana should be ramping up over this year, 2026. And you would hope that the annual production of the company overall should double at this point by the end of the year. Now, again, Tavshan is also only a 23% interest at this point, and the operating partner is the EPCM contractor which built their mine at Kızıltepe in Turkey. With the Dokwe mine, I think Ariana is going to do the same development model that they did in Turkey, as they have brought in recent weeks a significant shareholder, in this case, Chinese EPCM contractor that's experienced in building mines in Zimbabwe. So I suspect that they will come up with a positive feasibility study on this 1 million ounce Dokwe open pit deposit there in Zimbabwe, such that they will more than likely, in my opinion, probably do some kind of a joint venture deal at project level with that same EPCM contractor to provide the financing for the build. So that's my argument for this particular case. I would then expect Ariana's share price, in order to move according to what its current gold output would be on a peer comparable basis for the end of the year, and then with some upside indicated in its share price movement for the positive statement of financing getting in place before the end of 2026 for Dokwe. So you would see, I would hope here, a good 200 or 300% move in the share price.
Yeah, some good choices. Okay, my go. I'm going to start off actually just with a slightly, again, I have one stop, but I'm allowed a little extra. I am the CEO. But I'm just going to give a shout out to both Panthera Resources and Emmerson. I mean, they're in the mining sector theoretically. They're actually litigation cases, but 2026, I think, is going to be a year when we should see both go up 400%. Because it's the journey, and we're running towards their court cases. We're not looking at the outcome. We're just looking at the journey as we run up. So both Panthera and Emmerson, we've talked about them a lot in the past. I don't need to repeat all the knowledge. I see both of those potentially going up 400% each in 2026, which is a pretty big rise, to be honest with you. But it is totally achievable. My stock, though, I want even more. And I'm doing a little bit of a rerun of last year with Strategic Minerals. I'm actually going for Tamar Minerals, which is another Cornish stock. Obviously, as most people know, I spend a lot of time down here. I'm actually down here at the moment. But Tamar Minerals has actually, in some ways, assets you could argue are as good as Strategic Minerals. It's different. They have two assets. They're actually looking to acquire more assets, and they probably have it slightly easier to find more assets. Again, it's basically a tin play. Instead of tungsten, they've got copper at Devon Great Consols, and it was once the highest grade copper mine in the world. But the point really is it's currently on everyone's forgotten about it. It's a 1.5 million market cap or so, probably because it's trading on Aquis, which makes it very difficult to trade, but that doesn't matter. Could it go to a 15 million market cap? Quite easily, and that is a tenfold rise. Actually, could it go to a 30 million market cap if they do a few deals and have a bit of success? It could even do that, but I'll stick with looking for a tenfold rise in 2026. We know that Cornish Metals and Tungsten West are now starting to really progress in terms of building their plants, both of which will have process plants. And so the great thing for an exploration company down in Cornwall is that basically you find it, dig it, sell it. You don't have to build a process plant. You will have them on your back doorstep that can process the material. There's also, I think, the possibility of corporate activity down here as people decide, you know what, we're going to put all of these sort of groups together because it's pointless having so many different companies in such a small area. So Tamar Minerals is my stock pick for 2026. So well done, guys. That's hopefully set some interesting ideas running to all our listeners. Please do get in touch with any of us if you want to know more, if you've got other questions. And we'll be back to normal tomorrow morning with a standard 5-minute morning miner. There's obviously a lot of geopolitical things going on at the moment, so it's quite exciting in the resources space. I'm sure we'll have a fantastic lot of news to speak about in 2026. So keep listening. But thank you.
Very good.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.